Welcome to a new episode of Yahoo Finance's Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Now let's make some money and hopefully get a lot smarter. And to that end, here with me now is BNY CEO Robin Vince. Robin, good to see you. Last time I see you, we were on the Swiss Alps, talking about all things finance over in Davos. So it's good to see you on our not so humble abode here at Yahoo.
Yeah, it's great to be here with you, Brian. Thanks for having me, and it's good to be talking about the world as we come back at it after the summer break.
Yeah, I know. I didn't really have a summer. I was telling you a little bit about that before the break, and it was depressing. Now that I'm reflecting on it a little bit, I did absolutely nothing. All you do is work.
Well, you have to strive for better next year.
Yeah, right.
That's what we're about.
Yeah, I know. Continuous improvement. And, I would think, you probably get this question a lot, but a lot of our viewers and listeners may not know you operate the oldest bank in the country. What is that like? And how old is the bank, just to get that out there?
Well, first of all, it's a real privilege. So we were founded 240 years or so ago by Alexander Hamilton, the now infamous Alexander Hamilton. He was the original founder of the Bank of New York before he went on to be the first Secretary of the Treasury. And so we've got a real pedigree institution that's been doing a lot of different things over the course of time, but we've got a real hand in the development of the United States. And today, we're in the business of really serving our clients with our platforms all around the world. We touch 20% of all of the investable assets in the world. So we're very relevant to the financial system. We do a lot of things that are very important to the day-to-day functioning of the system, serving our clients, helping them make their way in the financial world.
I've heard bits and pieces through various interviews you've done. There's you have a lot of memento is not the word, just history in your building. I mean, take us inside of your corporate headquarters. What do you have that has lasted 240 years?
Well, it's actually very interesting for our people that we have this ongoing attachment to the various different aspects of our history. Of course, today we're looking forward. We're doing things for our clients today. But as part of our culture, recognizing our history has actually been quite important to our people and our clients. A fun couple of things that we have in the building. We have some of our original ledgers. So you can come into our offices, you can see Alexander Hamilton's account. You can see President George Washington's account from when New York was the capital of the nation back in those early years. We were founded in 1784, and we've got ledgers from 1787 and 1789. You can also see warrant number 1.
Wow.
It's the origin story of the national debt, the first ever piece of debt of the United States, which was actually a loan from the Bank of New York to the United States right in those early years in 1789.
As someone, a former trader and someone operating in the banking industry, well, what's the valuation on these things?
To us, it's priceless.
Right?
To our people, it's priceless. But it's also that recognition of the fact that we do and have done some pretty important things in the world of finance over a long period of time. And that resiliency, that trust, it's really part of our business model.
I want to get a little bit into your career arc, but given the history of your company, does that change how you lead? Do you think twice before making a key decision, given how old the company is and the history and how it's intertwined in the fabric of this country?
I think it does give a little bit of that extra sense of purpose and duty to the business, and that extra care and attention that any CEO of a company like ours would feel, because there's just this accumulated set of value and values that have built up in the company over a long period of time. It does make it something special, but it also makes it special for our clients, because our clients look at us and they recognize that resiliency, the fact that we've innovated over the years, the fact that we've been there through crises, through thick and thin, that we are there, that our platforms are there, that we're stable and resilient for our clients. That's a big deal for our franchise as well as for our people.
Why do you think the business has been able to withstand 240 years through crises, through booms and busts? I mean, not many companies have been around that long.
There are 3 things that I'd give you. Number 1, you have to be resilient. So you have to have a resilient balance sheet. We have one of the highest credit ratings available to a US bank. You have to be operationally resilient. You have to be able to work and make things happen every day for your clients. Number 2, you've got to innovate. So we're innovating, we're creating new products, bringing things to market to solve client problems. So we've been doing that over the history of the company. And then 3rd is culture. is our people wanting to be client-centric, wanting to be innovative, and ultimately caring deeply about the company and helping it to move forward. I think when you have those three things, you have a fighting chance to be around for a while. And we've proven that 240 years is quite a while in the financial services industry.
It is quite a while. And I only know you as BNY CEO Robin Vince, but you had a whole career before then. You actually started Goldman Sachs, the trading desk? Who is Robin Vince, the trader?
So I was an okay trader. I wasn't the world's greatest trader. So maybe the smartest thing I did was ultimately trade myself out of that position to go do some other things. That was the first half of my career. I grew up in fixed income markets. I grew up in, and then I ran a trading desk. And then I went on to do a series of different other things. I spent some time in Europe. I spent 2/3 of my career in the US. I was a chief risk officer. I've been a treasurer. I've helped to run a region. I've helped to run operations. So I've seen the breadth and depth of capital markets, and that's actually been really good training for me as coming into the role of CEO now at BNY. Given the nature of what we do in the world, all of those experiences actually come to bear.
When you were trading, did you have any rules of thumb that you followed?
Well, when you're a trader back in the day, you try not to lose too much money. So that was like a good rule of thumb.
Always a good thing.
You have to serve your clients, and then you have to try to make some money. So maybe some of the things haven't changed that much, even in the job of being a CEO.
You've touched a lot of different positions. What does that say about you? Do people come to you, I guess, to fix a problem? Because you touched so many areas of Goldman Sachs. Clearly, a lot of folks, a lot of leaders have seen various things in you.
Yeah, that's what it was. So I started off on the trading desk. I grew up and I took more responsibility, progressively responsible for more pieces of the desk, and then the whole thing, and then globally, and then a bigger business that sat on top of that desk. But then it was about solving issues or really enabling opportunities to be put in a position where you didn't necessarily know everything about it, but you had a set of skills, a cultural disposition, and then being able to come in, diagnose that problem, or really the opportunity, and then to try to unlock it. And I think if you do that well once or twice in your career, you get asked to do it more often, and then you build a little bit of a reputation around it. And so I did that serially at the firm, and I was asked by the leaders of the company at the time, and then I became one of the senior leaders in that company, but then had the opportunity to do that on a whole bigger scale at BNY. Now I get the opportunity to help this company, this storied brand we just talked about, unlock its true potential. And we've got a great set of businesses, and so now I'm in the unlocking business.
And you were doing this, so you're rising the ranks on Wall Street. Now you're the CEO of BNY, but you have a family. I mean, you're a dad, you're a husband. I mean, how have you managed all these things? And is your family still overseas? Or are they overseas?
We've been living here. We moved here 25 years ago, my wife and I. My kids were all born here. But you're right, it's tricky sometimes to be able to have it all. In fact, it's very hard to have it all at the same time. So for me, it's been recognizing there have been different seasons to that. My kids are a little older now. They're in college or just graduating out of college. And so it's a little different, the focus that I can bring and how the rhythms of my life work today versus what maybe would have happened 10, 15, 20 years ago when the kids were really little. So you're right. It is tough, but it's a very important thing to find ways to be able to do it. And my wife and I have done that together. It's been a real partnership.
Were there things you just had to give up?
Yes, and there are some things that you have to try to avoid doing. So I never took up golf. I tried golf.
You're not missing much. As a struggling golfer, you're not missing much.
I wasn't super good at it, but I also realized that it would be a real time commitment. And so that maybe sounds a little nuts, but for me, that was a deliberate choice. Am I going to spend 6 hours on the golf course at the weekend, or am I going to spend time with my family? And at the time that I was making that decision, I just really wanted to be able to spend that time because I couldn't do it all. And so if I was going to devote myself to my family life and devote myself to being good at work, I just felt that there had to be things that I would make choices about. And I think life's about making choices, but you don't have to make the same choice at all points in your life because the rhythms of life are different and you have to adapt to that.
So now that you're in a different rhythm, any plans to take up golf, pickleball? I mean, how do you relax?
No, so golf, I think maybe I'm not too old for it, but I'm not going to be one of these folks who takes up later in life. We'll see. Maybe if I'm 60, I'll reflect on that. But for now, I'm actually still focused on those same things, which is being CEO is a very full-time job. And I think if you're going to do it well, certainly for me, it's got to have a lot of my attention. And then life has to trump work. And so family is very important for me. Being able to be present with my family, focused on that, those things are all important as well. And, I enjoy those things. And so I don't find it super stressful to have those as the two pillars of my life.
When does your day start and end? Because I think we all think CEO that nobody gets any sleep. I mean, it just keeps going. And leaders are sometimes afraid that they're going to miss something if they're not always on.
Well, that's ultimately about having a great team around you. And so for me, investing with the team around me and sort of making sure that we got the right people focused on the right things, I don't think it's super productive to try to pretend to be always on 24 hours a day. Sleep's important, at least for me. But I get up early in the morning, I work out, I like to consume a lot of news so I understand what's going on in the day. I like to consume all my briefings and updates so I'm kind of ready for the day, and then I'm plunging into the day. Obviously, I spend a lot of time with clients through the course of the day, and so various meals, including through into dinners. But I pick my spots. I travel a fair amount as well. So planning all of that stuff out over time, being deliberate about it, knowing when to say no when you get invited to something. We talked earlier on.
Very important.
Absolutely.
Very important.
Heading to the US Open. I'm not going to go to the US Open. I like watching tennis, but these are busy couple of weeks for me. And so I'm focusing on the things for me that are the choices that I want to make.
Real quick, before I go off to our very short break, I should note, yes, I am going to the US Open. However, to budget that, normally I wake up at 2:40 a.m. to get my day started. I woke up at 1:40 a.m. because I knew I'd be spending about an hour and a half at US Open. So I'm time managing a little
You're
bit.
making your choices.
Yes, I'm making my choice. Now I'm going to pay for this because I'm not getting any sleep, but it is what it is. So just hang with us. I want to go into all things BNY. We'll be right back on Opening Bid. All right, welcome back to Opening Bid. Having a really fun chat here with BNY CEO Robin Vince. Robin, I mean, the main thing on Wall Street right now is what the Fed does and doesn't do with rates. How will rate cuts impact your business? And how do you think it will impact a lot of your competitors?
Well, we've said publicly in giving our outlook and guidance for the year that we are relatively insensitive to the next marginal move. The market obviously expects some cuts before the end of the year. That seems quite likely at this point. Chair Powell confirmed that essentially at his Jackson Hole speech. And so that's our base case view. But we got to be ready for different things. And so we can be surprised. There can be more rate cuts than expected. There can be less. And so being able to be ready, that's really what our clients are looking for from us. They want us to have the stability and the resiliency that they can build their businesses, rely on us. And then they also want advice from us. And so we talk to them about what we think is going to happen. My own view is that 25 in September seems pretty plausible. And I think if it were me and the data didn't change wildly between here and the end of the year, why not stick with the winning formula and do a couple more 25s and keep things nice and easy? Best way to stay out of politics, which is what Chair Powell says he would like to do, is to remain somewhat consistent, not have to make too much of a change in direction. But if the data suggests that they have to, then I'm sure that they will.
You think we're headed to an economic slowdown next year?
At some point in the market, you have to assume that there's going to be a little bit of a slowdown. I think that the Fed has done a tremendous job. I personally give them an A in how they've navigated the environment of the past couple of years. It is not easy to deal with an inflation level which is we haven't seen in 40 or 50 years, and then to be able to take the edge off that, manage what was an unprecedented event with the pandemic, and then be able to get to the place that we are now. I think most of us would not have predicted we'd be here if we look back a year or two ago. And so that's terrific. Having said that, it's a big pivot to pull off, and at some point we're going to be due for a little bit of a slowdown. I think what we should be rooting for, and I think we are, and all signs point to it at the moment, is that would be a gentle slowdown, a softening, as opposed to something more severe. But you got to be ready. And that is, going back to the beginning of our conversation, 240 years old, you only get to be old if you can be resilient to the unexpected. And so always being prepared is an important part of planning, I think.
A lot of your peers have been really out in front and saying capital requirements are too tough, the regulatory environment is too tough. How do you see it?
First of all, I'd step back and just look at how far we've come in the past 15 years. So 15 years, plus ago, we had the great financial crisis. That was very damaging to the American economy. It was damaging to the reputation of the financial sector. And so the first order of business, and I think this has been a public and private partnership. We sometimes talk about the regulated and the regulators and the regulated, but in reality, it's been something of a partnership, is to raise up the standards. More capital in the system, more liquidity in the system, more resilient financial system, so that we can all depend on that as we go about our various different businesses and roles. And I think we've done a terrific job collectively as a system making that progress. Now the question is, at the margin, what's the right next move? Is there enough? How does it compare internationally? We need a level playing field. If we want to have the greatest economy in the world in the United States, we need the greatest financial system in the world, and we need strong banks. But we also need to have competitive banks because we compete in a global world. So all of those issues come into play. And I think that's what ultimately the regulators are grappling with as they're figuring out this next leg of the so-called Basel III endgame.
Are there too many banks?
So it's an interesting debate because from a political point of view, we enjoy the system that we have today, which is we have a relatively small number of large banks. We're one of the 8 globally systemically important banks, so really the bedrock of being able to do big global things in the world. The US needs GSIBs because that's how we project our economic capabilities and our economic power outside of the United States. Part of that is rooted in the big GSIBs. And then we have a longer tail with a lot of small institutions, but those small institutions serve their local communities really effectively. And sometimes what it takes to serve a small rural community in Kansas or an inner city community here in New York City is not quite the same thing of what does it take to be a large financial institution. So I think there's value in the system that we actually have, and then we can sort of quibble about whether or not it should be 5,000 or 4,000 or 6,000. But that's a pretty unusual model. Many countries in the world have far, far fewer banks than we do.
I mean, do you think that we will get, I guess we've been talking about this for the past decade, M&A, a lot of M&A in regional banks. Is that ever going to happen?
I think the strength of banks is very important. So if banks find that they're too small to be able to compete, or they've got narrower business models and they benefit from being a bit broader, there's value, I think, in allowing that and enabling that. We've seen a little bit of that over recent times, but the regulatory environment has been a little chilling for some of those combinations. For us, we appreciate the fact that we've got that breadth. So I recognize why a smaller institution that wants to maybe have a few branches in a few different cities as opposed to just one place might actually be quite advantageous for them. Or if you're only in one business, maybe adding a couple of others, because the value of diversification is quite real.
You've really gotten a lot of not high fives, but you've been known as someone, I think, that pushed the ball forward in all things tech and AI. And in prepping for this, I saw, what was it, earlier this year, you're working with NVIDIA. And anytime I see a company working with NVIDIA, I sprout up because, I mean, this is the company of the moment. I mean, how do you work with a company like that, and how impactful is AI to the insides of your company?
Well, we were the first large bank to install an NVIDIA, what's called a superpod. Essentially, it's one of their sort of stacks, the sort of what they would call a supercomputer inside our firm. And we thought that that was important as part of our AI. We have a mix of both on-premises and leveraging external partners in our AI platform. We've built our own platform that can then leverage all of the external platforms of the world. So we're not trying to reinvent the wheel with large language models. We're happy to use the large language models from OpenAI or Llama or Mistral or the various other ones that are available. But we want to do it on our terms, protecting the data, because at the end of the day, that's what our customers expect from us, that we are secure and that we're making sure that our data and their data never leaves our control. So that's all the way that we've engineered it. But the AI superpod from NVIDIA helped us to be able to really power that platform layer. Now, what's next for AI? I think it's going to be very exciting. I really do believe this is one of those technologies that's going to bring the next generation of being able to bring leverage to humans. You know, we've had physical leverage for a long time, since the beginning of the industrial age and even before. the lever, the wheel, the engine, all of these things that helped to create mechanical leverage for humans. But really now the knowledge level leverage, the intelligence leverage that AI can provide, where we each can have an agent or an assistant, bots that essentially can work on collectively on our customers and our behalves. There's a lot of efficiency that can come from that. We're seeing some of the benefits of that in terms of being able to improve the quality of life of some of our people, make certain tasks a lot easier, make them more efficient, creating new solutions for clients that frankly humans couldn't really provide in the same way before. And so this is going to be a long journey, where this is not a story of 2024 or 2025, but I think we're at the beginning of a pretty interesting period of time.
Well, it's exciting. Do you share some of the biggest fears we hear out there about AI?
Look, you have to do AI responsibly. So irresponsible use of AI is a scary prospect. And so I think everybody's right to be cautious about how AI is deployed, because the ethics around it, the controls and risk management around it, that has to be done right. But like many different tools, if you abuse the tool or don't use it right, it's got a lot of ability to do harm. And so one has to be very careful to make sure that the guardrails are around that. We've been putting in place those guardrails. We have an ethics policy around it. We have a lot of controls. We have human in the loop, all of these things designed to make sure that it is being used well. But like many tools, if it is used well, it can actually be a force for quite a lot of productivity and client effectiveness.
Do you see it impacting jobs on Wall Street?
Look, ultimately, there are going to be some roles that need to be repositioned as a result of it. But frankly, a lot of our people want that, because we have people doing tasks today that frankly aren't particularly exciting, and they're not necessarily excited to do them.
Nobody wants to fill out a spreadsheet anymore.
So creating the opportunity for them to be more efficient, for them to be able to learn how to use these tools to make the roles evolve is actually also a good opportunity. It's another version of how we have to do it responsibly and thoughtfully. And this is why I think it's good that it's going to take time to do it. This is not a big bang where everything suddenly is available to us today. This is a multi-year journey, and that time gives us the ability to appropriately reposition. But the first experiences that we've had and that our people have had with AI is big productivity gains for our people.
Before we let you go, about a minute and a half left, and I didn't want to lose you before asking this one. I mean, as a company that's so intertwined in our financial system, do you see crypto at some point rivaling traditional currencies?
I think digital assets, I'm going to take one click out and just say digital assets, whether it's the technology, blockchain distributed ledger, whether it's the ability to take certain assets and represent them on those types of ledgers as a digital asset. I think there's a lot of opportunity that comes from that. The choice about whether or not an individual or wants to put all their money in a particular coin is a slightly different thing. I don't think the dollar is going to go anywhere. I think the way that we treat and make the dollar work efficiently and effectively in the world's financial system is going to evolve. But by the way, the traditional dollar can be real-time too. We have new real-time payment rails in the US. We have FedNow. We're very involved in that. We're actually the first bank to go live on those real-time payment rails. And so being able to make dollars work more efficiently isn't just dependent on digital asset technology, but it may have a role to play over time.
Really good, Chen. If you do start to take up golf, please just give me a ring. We'll go play, and I'll embarrass you with my game very, very quickly. BNY CEO Robin Vince, good to see you, and we'll talk to you soon. Appreciate you coming on down.
Good to be with you, Brian.
And that's it for the latest episode of Opening Bid. On the hunt for the hottest market commentary? Then join me, Yahoo Finance's executive editor Brian Sozzi, on Opening Bid, the show with unrivaled insights from top money managers and analysts. New episodes of Opening Bid every Monday, Wednesday, and Friday starting at 8 a.m.